Crude oil prices are rising for the third consecutive day, and this is applying pressure on the wider financial markets. Let's get into it. Hello traders, Fawad Razakzada here, market analyst with FOREX.com. Today we'll be looking at a few markets, and it's all to do with crude oil rising once more on the ongoing situation in the Middle East with no deal in sight. Bond markets are again under pressure, and this is providing support for the US dollar, which in turn is applying some downward pressure on gold. Over the past 3 months, gold has fallen and the prior strong bullish trend has ended. Now, bearish momentum is picking up because of rising bond yields and strength in the US dollar. In recent trade, we've seen gold poke its head above this trend line, which it briefly took out a few days ago, climbing for a time above the 4,580 level. But it got rejected there. And since that rejection, we've seen prices drift lower. Yesterday, the precious metal closed with a doji candle holding underneath the 4,500 level, which is now a very important short-term resistance level to watch. Today, we've seen some downside follow-through, and gold is now on the verge of potentially breaking the 200-day moving average, which is going to be a very significant technical development should that happen, because the 200-day moving average hasn't been taken out since September 2023. When that happened last time, we saw around a 5% decline in the price of gold before we reclaimed it. And since then, the 200-day moving average has been tested a couple of times, for example, here in November, leading to a sharp rally. And then the most recent test was back in March. That too led to a sharp rally. Last week, we had another test of the 200-day moving average when gold formed this hammer candle. But the bounce from it has been quite mild, I would say. So far, we haven't seen significant upside follow-through, which suggests that the pressure is building for a potential breakdown. So should we see a clean break below the 200-day moving average this time, then that could potentially lead to a sharp drop. Initially, the target would be liquidity resting below the low of that hammer candle at 4,366. Below that, there's not many obvious levels of support, so round handles like 4,300, 4,200 could be the next downside targets. But for me, the next major downside target is all the way here, the March low of 4,100. And then below that, we have the psychologically important 4,000 level. So there is the potential for a big drop. And while one could argue that the Middle East situation should keep haven demand supported for gold, this is not always necessarily the case, because gold has been correlating positively with the stock markets in recent years. So a sharp rise in risk aversion could hit equity markets as well as gold and silver. We've already seen Bitcoin take a dump in the last few days, and that could be something to watch out for in other markets that had in the past been trending strongly. Gold could be one of those. Conversely, if oil prices take a dump because of a potential deal in the Middle East, then that could reduce some pressure on gold, leading to a break higher. From a purely technical point of view though, I'd like to see a clean break above the 4,580 level, this level right here, before I drop my short-term bearish view on this market. In the FX space, the US dollar is continuing to rise because of bond yields rising again and crude oil supporting the US dollar. Meanwhile, we've had some stronger than expected economic data from the US, which is suggesting that the largest economy in the world is holding up pretty well despite everything going on in the Middle East. And that has been reflected in the US dollar rising across the board, especially against low yielding currencies. But now it's also showing strength against its northern neighbor, the Canadian dollar. The dollar CAD here has broken above the 200-day moving average after a consolidation around it in the last few days. And once again, a bearish looking candle didn't bring out the sellers, suggesting that the bulls remain in control. Now, in this currency pair, we've had lots of bearish looking candles starting over here. This red candle that should have been quite bearish, but price never really took out the prior low. And once we broke back above the high of that candle on this particular day, things have turned quite bullish on this currency pair. We've since had a few other bearish looking candles, for example, this candle here, or the one after that, or even the one after that. All of these three candles were looking bearish at one point, but nevertheless, the bulls prevailed and the dollar CAD pushed higher. More recently, we had this bearish looking candle here, this bearish engulfing candle around the 200-day moving average, and that candle was formed around prior support and resistance around this zone here. So that was quite a bearish looking candle. But yet again, we've had a little bit of downside follow through right here on the next day, but we didn't see any downside follow through. So the clue was there that price was always going to push higher, but the next day we closed above the 200-day moving average, and that I think was the turning point. And since then, we've had another test of the 200-day moving average here, which held, and today we're seeing some upside follow through. So price action is quite bullish on this market, and unless we now go on to take out the most recent low around 137.70, the path of least resistance on the dollar CAD remains to the upside. So from here, where do we go? Well, let's highlight some levels. The most recent high comes in at 139.67, and that happens to be just underneath the next psychologically important level of 140. So I think 140 is the next obvious target for me, because there will be stops resting above the most recent high, which I think will be in trouble given the bullish structure here. And over the next couple of days, I'm expecting price to gravitate toward the liquidity pool resting there and eventually reaching 140. Of course, we've got the non-farm payrolls report coming up on Friday, which could be the trigger for that move, or potentially a reversal for the US dollar if it comes out much weaker than expected, although a lot will depend on the direction of oil prices and on the US-Iran situation. So there are a few things that could potentially flip this market, and indeed other markets as well. But as things stand, the path of least resistance, as I said, is to the upside. So I'm expecting price to gravitate towards that 140 handle in the coming days, because the clues that we are getting from price action suggests that the bulls are in control. For more market updates, head over to the news and analysis section of our website, FOREX.com. I'll see you in the next one. Take care.